That's probably better. Hey, good morning, everybody. Welcome to Forex.Today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So, ni hao ma. Good morning, Jumbo. Konnichiwa. Or I guess I should say Ohio. How are you guys doing? My name is Wayne McDonald. I'm a currency trader just like you. I love trading. Trading is very unique as a business, and in particular, the foreign exchange market is unique in of itself. Has so many advantages over trading stocks and bonds and options and such. So Forex is wonderful. I know that because I've spent the last 20 years whittling it down to perfection. Okay, so cool. So thank you for being here. Please like, please subscribe, please leave comments, and leave comments on the video recordings. And what you should do is document what you learned as you go through watching the video. Document what you learned, type it in there, and so now then you can search your comments and find particular videos. So consider it your personal archive of knowledge, your knowledge base. Very cool. So thank you for being here. We are a foreign exchange trading community of more than 15,000 people stationed all around the world. We like to get together this time of the day to synchronize our watches, to align our satellites, and to share in this thing called Forex. Of course, everyone here wants to improve patience, discipline, so on and so forth. So we like to focus on bias and trend, technical analysis, fundamental analysis, trader psychology, but ultimately every single day is dictated by you. So if you want me to cover a particular pair or cover a particular topic, you are the boss. I'm a humble currency trader. So anyways, my name is Wayne. Thanks for being here. The sponsor of our community is tradersway.com. They're a broker. You're a foreign exchange trader. Cool. So maybe there's an opportunity to do business together. So now they're luring you in through investing into your success up front. And then, over the course of time of you hanging out here at Forex.Today, if you develop the skills and the confidence you need to trade real money, you'll say, hey, you know what? That Trader's Way thing was fantastic. That really helped me. These webinars are fantastic. I think I will give them a chance. I'll try them out. Okay? So start the relationship by opening up a demo account today. Hey, Meta, where you been, Meta? I was saying in the meeting last night, I'm like, oh, man, where's Meta and her sock puppets? It's so lonely without Meta. Oh, happy birthday. Did you get her a nice Cohiba? But here's like Tesla down 10%. Great, but it's only up 400, right? So, yeah, okay. Cool. So anyways, thank you for being here, everybody. Let's begin with the indices. I'm too close, man. I'm too close. I gotta. Wow, congratulations. Yeah, very cool. You got good blood. All right. All right. Oh, we did. I apologize, Peter. Well, keep on me today, okay? Make sure I cover that. Okay, so what do you see here? So I don't know. Just paying attention. I guess we should keep it to the hour. So it's still a bit strong. It's still a bit strong, but it might be changing, right? Like we're outside that move. Okay. So you kind of have to pay attention this level here. Okay. So that's the US dollar versus everything. Double top, well, maybe, but not quite yet, but maybe. I mean, it's the thing you're paying attention to for sure, right? Swissy weak, that's a good thing. Yen all over the place. Okay, what we want is weak, weak, weak. Okay. Aussie trying to recover and then collapsing again. Euro down, pound all over the place. Kiwi up, CAD up. So a little bit of commodity play. Hey Raymond, I hope you got my email from about an hour and a half ago. My bad. With this new computer and now a new phone, I just didn't. Neither of them were connected properly. Okay, so now then let's look at commodities. Okay. You guys remember this? Right on. Thanks, Ray. Although, it does matter. These things matter. Okay. All right, so we were here a bit ago. Was it 2 days ago or yesterday? I don't remember if it was 2 days ago or yesterday, but we were anticipating a double bottom. And then I talked about it making a higher high and then making it a higher low. Is that how you remember it? Okay. Is that how you guys remember it? Remember, if you don't remember it, it didn't happen. So if you're a bull, you would be playing it as a, right, like that. This is the double bottom is the 1, the higher high is the 2, and the 3 is the roll reversal. Okay. So there's the plan. Now, of course, for that, you need risk on. Okay. And here's his thinking early. Well, late. Well, first of all, so the way I break it down is you can play the double bottom, okay? Or once you recognize the higher high, you set up the roll reversal here. So the standard operating procedures, you're kind of late. You should have been thinking right around 10,500. Okay? So since we're looking at 1 hour charts, yeah, where were you 2 hours ago, 3, 4 hours ago? You should have been on that on the London Open. Yeah, me too, mate. It was good, and the recording is only 2 hours. We actually spent 3 hours yesterday in the group meeting. It was a 3 hour long, and everyone was amazing. The recording's only 2 hours because we did an hour of the group work. Yeah. Jay, at 4 p.m. Eastern Time. Ciao. Okay, so that's your thought. Yeah, you should have been on that on the London Open, but now you drill it down. You're also front running next week. That's the other importance of what's going on now. So this would definitely, for Bitcoin, be a Friday front run. Peter says there's no London Open in crypto, Wayne. Well, no, no. So what I'm saying, Peter, is I disagree. It's not that there's a market opening, because there's no market in Forex either, right? You're like, Wayne, there's no London Open in Forex. That's not true. What's happening is human beings show up, Pete. and they're making their trades. You know, they get to the office and at 8 a.m. they throw down a trade. That's what it is. I'm not talking about a market opening. Okay? So it has to do with human beings. So this is a Friday front run, meaning the basis of next week's trade is this buy zone. And you're in it on a Friday, and you should probably be up here by Tuesday. Okay. Okay. So anyways, going back to that, Peter, it has to do with just volume, and that's that. My oh my, WTI. We've been sitting here for a week waiting for you to justify my trade, my trade. All right, so we're just sitting here waiting. I think you can see it's fairly obvious what we're looking for. So your question for today is, you know, will that hold? Is there AI running brokers, or is it humans? Like, I don't think there's humans pulling switches like that. But like in the process of reconciliation, there's still a lot of risk management involved at the broker level. I mean, I'm not a broker, so I don't know these things well. But actually, I just met with the CEO and chairman of a reconciliation company that needs some help in the Forex world, but they work with other types of clients. And so I've had long discussions with the reconciliation side, meaning like, you know, matching buyers with sellers, but also, you know, how do you manage the risk of overly large positions in one particular area of your clientele, or depending on the type of broker you are, you know, there's different needs. So like if you expect a big trade coming and you know, where's the cash positions if you're invested in other places, and how do you manage that risk? And there's somebody in charge. There's someone that actually monitors everything in real time and then would report to like a chief risk officer or something like that, or chief financial officer might be involved in something like that too. And so I don't know how automated it is. Obviously, software is heavily involved, but there are still humans that are responsible for that risk. Which reminds me, I am unbelievably busy today, but I really do need to respond back to both of the CEO and chairman of that company. I need to find the time today. Just don't have time, man. Right? Well, so Raymond, yeah, but he's talking about, you know, are there humans involved? You know, so you need someone that is involved on the reconciliation side of the back office, right? And that's really what the question's about, is the back office. Okay. So here's another way maybe to answer that question. Contact MetaTrader and say you want an MT5 license, and what do you need? And ask them, and they'll say, "Are you a broker?" And you say, "No, I want to be a broker." And then they'll say, "Well, we only work with brokers." And you're like, "Well, where should I go for broker?" Like, look it up, right, and find out what you need. And what you'll most likely find, even if you do a white label with somebody, and I'm not sure if Traders Way does white labels anymore, But you look into the white label, and when there's a white label, they're like, okay, you can have your branded MT4, MT5, everything's good. You're like, okay, that's good with my logo. And they're like, yeah, with your logo. And then they're like, who's going to do all the risk management? And you're like, I want you to do the risk management. They're like, well, then you need a gray label. But then the gray label, we're not going to give you a branded thing. And all of a sudden it's, you're like, well, I want the MT4 or MT5, but I don't want to do all the back office. So there's obviously real back office people. Okay. Yeah, the algorithm side of it, yeah, that's cool. But as far as broker management, there's real risks involved, and I don't think it's a set it and forget it scenario. All right. So, anyways, maybe some up next week. This is right now. You see, there's a little bit of a step up. See, I call this a step up. So now this is a slight step up, which is telling you a couple of things. The market's been mostly sideways and then a little up. But that might be redescribed or described differently as not down. Okay. Well, see, pundit, that would be a risk management issue. Okay, so they might be finding that their clients are loading the boat, betting on the election, and they also might be, most of those clients might be all betting on the same thing, which is very risky for the broker because right? And then lastly, what kind of risk would be happening to your broker if they were not entering the trades in the interbanking system instead of they were booking them? And that becomes an issue now for that broker, because if the trades aren't in the interbanking system, instead they're basically trading against their clients. Not that they're trading against them, they just expect 99% of the time the client to be wrong. So in that case, they're expecting the client to be wrong, and therefore they're not entering the interbanking system. Then, and now all those booked clients are loading the boat on a directional bet. Let's say everyone's long all the Japanese yen pairs, betting on this election, and they're wrong. And they're right. That means the broker's wrong and we'll lose money on every single one of them. So now they're like, oh, schnicker, we're screwed on this, right? So now they might be saying, okay, no more. If you're going to trade more, we're going to have to charge you more to offset the risk that we're taking, because we're booking everyone and everyone's bet on one thing. And if they're right, and that means that we're wrong and all that kind of stuff, right? So you can learn a lot by that. Now, sometimes the margins are simply the interbank. Okay? And that's typically at times of high volatility or low volatility. But I don't think that's now. So you can read into why they're doing that, and if you understand the why, then you could probably figure out how they work. You see what I mean? And so, is it the interbanking system, or are they taking on too much risk? Okay, so you have to figure that out. I don't know who your broker is, but whatever. So October is going to be great. What do you guys think? October is going to be fantastic. I'm looking forward to October. You pundit, yeah, high volatility. There's always high volatility. So we've had a big decline in a lot of pairs as the dollar strengthened, as the yen strengthened. Okay? And now we have to move on to the next thing. So, but don't be like those traders at Pundit's Broker, loading the boat, betting on one thing. I want you to remind you that you have your bias, and that's based on fundamentals. You think the dollar will weaken because of something the Fed said. Okay? Or you think the Aussie dollar will weaken because something the RBA said. That's fundamentals. Okay? Then the second thing is your bias, now based on fundamentals, is confirmed or denied through scientific methodology. You have to test your hypotheses. In this case, if you believe, and now I'm looking at WTI, I believe a couple of things. One, there's still a little too much oil in supply. A little too much, but not nearly as bad as it was. And we're in a process of normalization. So honestly, $40 a barrel is probably about right. But as the situation improves, either we increase demand or decrease supply, oil will then go up. And that's what I want to see, and that's what I'm planning for. So if things improve economically, demand will increase. And right now, since oil prices have been so low, I think if you look at rig counts globally, production is likely to be lower than a year ago. So therefore, the oil that we're using is from oil that's in inventory. Oops. So therefore, supply would be heading down. That's what I'm thinking about. Okay. Now, the challenge to my theory, right? The challenge to my theory is a trade war between China and the United States. That's mostly rhetoric. So, but it can have an impact. More importantly, on the short run, is economies shutting down or slowing down because COVID 2.0. And that will destroy my demand side of the equation. And if demand goes down, we'll still probably just whittle away our supplies, but I need demand to pick up. So there's my threat. So I have my SWOT analysis, if you will. Okay, at least the opportunity and threat part. So I know what I want, and I know why I want it. Therefore, I know what to look for. I know how to do research. Once again, you can go to the OPEC website, the EIA website, the IEA website, and you could look for demand creation and destruction data, and of course the supply data. Now, supply, I tend not to go to the OPEC site and IEA and EIA. I mean, that tells you now, but it doesn't tell the future. So one of the things that I like to do is I like to go to the producer websites like Exxon, for example. Now, if you look at BP, British Petroleum, Exxon, Chevron, Royal Dutch Shell, they all have very good websites. And one of the things I did at Harvard in my class on oil was actually download. They have annual reports, of course, but then you can also download. They give you annual outlooks for their industry, and they give you their projections for supply and demand, right? And they do press conferences where the CEO and his chief staff will come out and tell you the state of the industry. Oil prices went to zero. That's really bad, but we think things will improve. And all of a sudden you can watch all these things and you're hearing it from the people. And you're not reading it in the Wall Street Journal as a Reuters press release. You see what I mean? So that's what I would do. Okay? That's what I would do if I were me, to put all this together. And if I get what I want, this is what's happening in the future. Now, this could then be correlated into CAD strength and Noki strength. Now, for the Noki, really what you want is not WTI, but Brent. But there's such a high correlation, I would imagine they're the same. But you'd do Brent instead of WTI. Because Norway is a long ways from West Texas. Okay. On says we need stimulus, ain't going to happen. So that dropped out. That's one of the reasons the US dollar got strong. Okay. That is one of the major reasons why the US dollar got strong in September. One of the things we were talking about in July and August is that I expected when Congress got back from recess, they would throw together a stimulus package, and I was guessing 1.6 trillion. And they got back and did nothing. And a lot of people went, oh, wait, what? And that's dollar strength. Okay. So that's too bad, so sad. Hey, I love free money. But it didn't happen. But that was priced in. You see that? All right, cool. So there's your my oh my WTI. I expect up. Or not expect, I'm planning on up. And the first part of up is, will this hold? Okay. Can we stay above 39? Well, it's actually like 38 and a half. So let's just call it, how about 38? We'll play it 38 this way. Okay, can we stay above that zone? And if so, up is what we're hoping for, okay? So I have to use now technical analysis on smaller time frames. Cool. What do you think? So on a 15-minute chart, you'd sit and wait for a 5A cross up. Aisha's waiting for the turn. That's wise. My advice to you guys yesterday, and it's the same advice given again to the group that met last night. Not trading is the easy thing because your losses will go away if you don't trade, but it's very hard to make money. And ultimately, your job is to make money, right? So stepping aside because the market conditions are not favorable, that's fair. That is fair. But the more active way of handling the situation is dramatically cut your lot size and try to tiptoe into the cold water. You still have to buy at support, and you still need reversal patterns and all that kind of stuff. But you got to get in the game too, right? You don't want to observe the reversal. Because here's what often happens. You stay out because you're conservative. Actually, typically what happens is you lost a lot of money on the way down. So then you're like, whoa, I walk away. Like, I want the pain to go away. The best way to make the pain go away is stop trading. And so you look at it, you're like, it looks bad. And you look at it, and it looks bad. And it looks at it, and you look at it again, it looks bad, it looks bad, it looks bad. And all of a sudden you realize, though, after time has gone by, you miss the whole recovery. Because it always looks bad because it hurts so much, right? You understand? So it's easy to miss the reversal when you're in, protective mode. And you have to realize, in my book, I talk about amateurs are worried about losing money and professionals are worried about making money. That's where the worries lie. And so when you're like, wow, I don't want to trade because the market conditions are bad, that's cool. So I'm not saying that's wrong. But I think the better thing is to stay aggressive, if you will. Right? Otherwise, you risk never getting back in. So you got to stay aggressive But again, you're still not allowed to lose money. You just can't be afraid of losing money. So if you dramatically drop your lot size, you're always looking to go in for the kill. You're waiting, right? But you're still buying at support. You're still buying reversal patterns. You're still doing what you want to do, but you're in the game versus an outside observer. And I'm telling you, just from experience, when you're the outside observer and you're conservative and you're worried about the pain and you're worried about losing money, you often miss the opportunity. So instead, dramatically cut your lot size and not be afraid. Just trade great. And then you'll know you got it because all of a sudden you got 3, 4, 5 trades that stick over the weekend, and then you open up Monday and Tuesday and they're up 200 pips each. You're like, aha, I got it. And then you go back to your normal lot size. Because you'll recognize that the market did reverse back in the direction you wanted it to go all this time because you're in the trade, not because you're out of the trade. And there's a big difference. It keeps you so much sharper to be actively aggressive looking for your opportunity. Right? You know what I mean? So try that. Like, for example, at least try it on a demo. Like, trade the way you want to trade on the demo so that when it starts to work, you see it there, and then you take action on your live account, right? It's just too easy to sit on the sidelines. That's where it's safe. We don't want safe. We want opportunity. We want risk. See, we don't want undue risk, but we get paid to take risk. So you got to stay hungry, right? You got to stay hungry, but you just can't take a lot of risk in this case because you know market conditions are not favorable, but you expect them to turn favorable at some point, and you want to be in on that kill. Okay? I think from the military, you know, things really change if you're in active combat. And I'm not in active combat, and I'm not trying to pretend I am, but I know I have several friends that have been in active combat a lot. And I think there are two things you got to be worried about for when you're in active combat. One, you're afraid. I mean, yeah, we're always afraid, but like you're frozen afraid. You can't get out of the foxhole. You won't run across the field. That can be a problem. And the other one is you're not afraid. And that is also dangerous. In both of those scenarios, someone is going to get killed or hurt, right? Someone's going to get hurt. And it may not even be you, but you're the one frozen in the foxhole. Someone else has to come back and kick, take care of you, and that person's probably going to be the one that's hurt, right? So anyways, you got to stay focused, and you got to keep moving, and you got to keep doing your thing, right? In this case, your risk mitigation is not getting out of the market. It's dramatically lowering your stop, okay? So keep firing your weapon. Keep firing your weapon. Keep moving. Keep going for your objective, okay? That's what it's about. All right, cool. Master Trader said, almost done with the FX Bootcamp course. Right on. I think many people do it 2 or 3 times, though. Okay? All right. Yeah, thank you, Moreno. All right. So there's that. So, Noki, do you guys, you want to look at something that you probably don't look at very often? Oh, by the way, here's the same trade on Brent. So if we get Brent up at the 41 level, right? If we can get above 41, your Noki is going to go with it. So that's why you want to look at Noki. Noki, can't you see? I don't even have her here, so let's throw in some Noke. Noke way. The programmers at MT4, MT5 are just so silly. Whoever invented this, like, let's organize it in weird baskets. Yeah, USD NOK. Let's make a weird basket. We'll make multiple weird baskets. It'll be great. Can we do exotics? Sure thing. All right. Holy schnicker-schnacker. I think Tesla sales are going to go down in Norway. What do you think? I think a Tesla just doubled in price. They're like, I like Teslas. They're 200,000 Norwegian kroners. You forget it. I'm going to buy a Toyota that gets 42 miles to the gallon. I don't need an electric Tesla. Forget it. Okay. What was the bullish target for September on this pair? What did we talk about in July and August for September? What was the September bullish target that we discussed in July and August? The bullish target for September. Master Trader said R3. I'm wondering if that's in the training course. I mean, well, it would be in the day trade? No, swing trading course, I guess, right? M5, I don't know anything about M5. Sounds like an overpriced BMW to me. But R3, yeah. Hey, Gary, stupid question here, but does St. Lucia have a military? Canada does. They run the United Nations, which is interesting, isn't it? Like the St. Lucian Navy. There must be like a border patrol of some sort zooming around in awesome boats. Amazing to think of a country that doesn't spend money on military, right? Special Forces, yeah, SSU. Very cool. Get those get those drunk tourists off the beach. Very cool. No, I bet you they're pretty kick-ass, too. So anyways, what do we do with this? Like, holy crap, huh? So the reason I bring up the R3 is we did talk about it 12 weeks ago as being the target. Only in the month of September, by the way. And there we are. That's the target. That's pretty amazing, huh? Now we're double topping there. So the thing is, if we can get Brent up, maybe we get some action like this now. And by the way, that is Foresight. Oh, Austin, are you in St. Lucia? You're in the Eastern Caribbean? Caribbean cops, I like it. I like that. Oh, yeah. I imagine they're like unbelievably serious. Like unbelievably serious. You don't want to piss those guys off. It's a TV series. No way. I'm gonna Google that. I'm gonna. That's awesome. All right, cool. So this is all foresight. I want you to understand, guys. There's nothing on this chart that says this. Our job at some point is to predict the future. At some point, our job is just to follow what is, and that's when you're trend trading. You're just trading what you do. You know, like you're riding the 4-hour 21, for example, and that's all you're doing. Okay. But in other scenarios, you have to predict the future, and you're like, ooh, okay, now we're in a zone in which I think we could turn. And that's different than just riding the moving averages, right? So this is following the trend and then being observant to potential increases in risk. So we don't know that it will fall. In fact, there's nothing on this chart that tells you it would fall. Everything on this chart is up forever. But we know that that's not likely. The up forever thing, not forever. But right now it says nothing but up. So you don't want to bet against the up. That's ridiculous. But if you were long, you should at least recognize a small potential right now for an increase in risk to your long bias. So if Brent goes up, so let's say if oil goes up or the US dollar goes this will happen. And if both happens at the same time, and they could, for fundamental reasons, you would get that. That would happen. You'd get both at the same time. Then this could be a hard and fast stop. And at least you should know, like, ooh, in that situation, you're ready. You're like, ooh, look at that. So you decide in here maybe, let's say a breach of the 21, you're like, okay, I'm out. And also on top of that, you're not the buyer that says, okay, you gave up a whole bunch of profit here and then you bought it back again. And, you know, so you make, I'll just make a number. You make 500 pips up and then you lose 500 pips down because you didn't see it coming. You didn't understand what was happening and you were just following, I don't know, something, right? Lagging indicators and hope. And you don't realize that the gravy train ended. Okay, so that's what you want to see, is the potential for an increase in risk so you can change your behavior. That's the most important thing. You got to see reality. So nothing says down, nor should you be selling, but you should be eyes wide open for October. And of course, you'd have to be able to say, well, you understand this is all up, but your analysis of the demand side of oil and the supply side of oil and the seasonality of October and your bet on the election, the outcome of the election, right? All these things make you want to sell this pair. And you know you don't want to sell it now, but the price is right. The issue with you don't want to sell it now is not the price. The issue is the time. Okay? But you might be interested in this or this if you see demand up for oil, supply down for oil, and US dollar weakness. If you started seeing signs like that, then you're like, oh, well, because of the seasonality and because of some other things, you're ready for this to come down. And you start getting in the game, either here or whatnot. And your eyes wide open. Okay? Now, as a bull, too, if you see this around 9.5 and you can't breach this as a bull, you should at least say, oh, my God. If we can't breach 9.5, bears will enter the market. Like if you can't breach that 9.5, it's this month's target, by the way. Put that into perspective. Like seriously, 12 weeks ago, we indicated that this would be the target. There's almost no other month that we do that. And so now, anyways, we're here. Like, this is a radical topic to say, oh, well, September's going to be different than all the other months, and that one we're going for R3. Amazing if you think about it. So now that we've hit it, you should think, well, a lot of people are thinking the same thing, like, that's a hell of a trade. Maybe it's time to get out. But also, you should understand that under these market conditions, and I'm measuring market now, the high, low, and close, when you do the analysis, what's the standard deviation, and so on and so forth, and you do all your calculations tell you that you want to be a bear if you're already a bear. You want to look for bearish market conditions at 9.5. Not because it's the bullish target, but because it's where the bears want to enter. So you should at least as a bull say, if we can't breach this 9.5, you know there's an army of bears that are going to tear this down. See? Bears attack like this, rah, and they tear it down. Okay? Bulls attack. They get down with their horns and they attack up. That's the bulls and bears. Now in Asia, I think they do the tiger versus the elephant. Is that right? So I think a tiger attacks this way and an elephant uses its power. What do? They spin, Jeff. They roll. Yeah. Does anybody know? It's elephants and tigers, isn't it, in Asia? Not bulls and bears? All right, anyways. No, still bulls and bears? Well, if I was Asian. If I was Asian, I got to be careful. Especially around millennials. My son keeps telling me, that's racist. You can't say that. I'm like, what do you mean? I love Indian food. You can't say that. That makes you racist. I'm like, I didn't say anything about race. I like Indian food. That's racist. You're like, dude, everything can't be racist. But millennials, I don't even know if he's considered millennial. It's probably too young for that. But yeah. If I was Asian, it'd be tigers and elephants. That's racist. No, I'm not racist, bro. Angels and demons, yeah. For sure. Anyways. Indian food is amazing. And Thai food, too. Oh, my goodness, right? Oh, butter chicken. I was in Jaipur, I think. And we go to this place, and the butter chicken was amazing. Amazing. So I ate, and I ate, and I ate, and I ate, and I ate. And then all of a sudden I realized I'm so full I'm going to die, I think. And then I'm like, wait, I probably shouldn't be eating that much Indian food an hour from the hotel. You're like, what if I get belly? So I'm like, oh my God, I think I made a big mistake. I just ate like 5 servings of butter chicken. And my friend knew the owner, and the owner comes out and he's like, oh, I brought you more. I made you more. I'm like, oh no. Oh no, you're kidding me. Like, I'm going to die. I've eaten so much, but you have to eat it, right? I'm like, a 6th serving. Oh my God. No. Okay. So anyway, so I ate the 6th serving. I'm like, oh my God, I was in so much pain because I had eaten so much food. Like, people had to like hold my arms as I get back to the car. It was just, yeah. Yeah. Oh, yeah. but it's so good. Now, Thai food, the soup with the red curry and the duck and the pineapple with all the coconut milk. Gang Kapoor, Gang Kapoor. No, those are vegetables. I forget the name of the soup. Oh, I've actually, and this is the only time it's ever happened to me. Not Tom Yum. Come on, Gee. I've actually became intoxicated from this fabulous Thai soup. Intoxicated. Not because there was alcohol in it, but because it released so many endorphins in my brain. And I'm like, whoa, dude. So I remember sitting in my living room, and I just sat on the floor. I'm like, holy crap, was that amazing. But it was the same thing. Like, I'm drinking it. I'm drinking the soup. It's so good. I'm like, I got to have it all. All of a sudden, I'm like, oh my God, I need to sit down. Yeah, like literally, I was like, hi. I got intoxicated from Thai soup. Oh, oh man, you got to try it. It's got duck in it, and the duck skin is still a little bit crispy, and then there's this red duck meat on it in the red curry, and it's spicy but not like ridiculous hot, but it is spicy, and it's got the pineapple in it and coconut milk, and holy smokes. Oh my God, that is so good. Oh, but I do make a pretty good buttered chicken. So every once in a while, I'll do that at the McDonald household. Okay. What was I going to do? Windows, vertical. Let's go Bert. So you got to watch that, guys. It's too early now, but maybe, just maybe, right? Maybe, just maybe. Because we can see there's logical turning points. Can you see this? So we have this radical month, and look, it did exactly what it was supposed to do. So one of the things that can happen, if you don't get the market conditions you expected, you can beat yourself down and say, I was wrong, or something like that. Or the market is too crazy. In those situations, I want you to remind yourself that even in months where you don't get what you expected, what you should be looking for is the logic in what actually happened, not whether you're right or wrong, but the logic of how the market is behaving. Can you see, like, these are exactly prices you would expect and behavior you would expect in a market. So even if you're not right, and I'm not saying you weren't right, but if you're not right, you should still say, well, I understand what the bears were doing and they got it right this time. And you'll get it next time. It's easy to kind of feel like, oh my God, Forex is so random. Forex is so random. It's just unpredictable. Dude, this is the exact sell price. This is the exact buy price. Okay? And this is the target for bears. So it behaved exactly as one would expect. So the issue is, if you were a bear here, you nailed it. If you're a bull here, you did the right thing, but you lost money. Not because you were wrong. Buying at this price was the right thing to do if you were a bull. Okay? And if you did it in the first wave, then you bought it down in here, and then maybe you lost money, but your stop was supposed to be here, so I don't know if you moved your stop or not. If you moved your stop, then you broke even. If you didn't move your stop, you stayed in it. And then now you're up here, you probably did move your stop, and it came back down, you broke even. Or you had moved your stop to follow, and you made a small profit. But either way, you did the right thing, and it didn't work out for you as a bull. So it's when you're doing weird crap in between all of these things. It's all the buying and selling in here where your losses live. Okay? Where the inevitable truth of this whole thing is this is the exact selling price and this is the exact buying price, and you knew that last month. So you either sold here or you bought here, and both of these traders were most likely able to move their stop to break even. That's the fundamental basis of trading. And everything else in there is noise. Or follow-on trades, okay? In which you're still trading based on the one thing. The one thing is bulls would have been buying dips, buying dips, buying dips, buying dips. Oh, out. Buying dips, out. And then this one out. And then they're out, like meaning they're not in any more trades. And now they're thinking counter trend. Where bears were the opposite, of course. And they're like, oh yeah, this is way overbought. Here's my price. And they took it. Right? And they're adding follow-ons. Sell, 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 out, 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 sell, out, sell, 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 out, out. And they're doing their job. And if you're doing your job properly, it's a standard operating procedure. Okay? Okay? So everyone that's going through the training courses, in particular if you're looking at swing trading and day trading, this is how they all add up. Okay? It's the basis of each trade. So in this scenario, even if you're wrong, right? So it didn't work out for you because you were aiming way up here. But you could say, well, this is very interesting to me technically. So beginning at that point, you might have shifted this way. Let's do, I want to do biased pivots. I want daily bullish mode. Okay, that's perfect. All right, so if we can click in a little bit here, and then I have to turn this off, and I guess that's it, right? I guess I have to turn that off too. All right, let's go back here. All right, so if we go back into time, and you're a bull, bulls don't buy here. Bulls buy between these two lines. This is not a bullish entry, okay? This might be, but okay, but this is where it gets interesting. Then you might have tried to set it up, didn't quite work, retest, okay? But this is when the game begins for you as a bull. Up, 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 down, down, up, 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 down, down, up, 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 down, down, right? And you're following this on your swing. So in here, there might have been swing 1. Here and here might be swing 2. And then there's your day trade, your day trade, your day trade. And you're following that until the day trades are telling you it's stopped. Okay? Day trade, day trade. Okay? And full stop. See? So here's you're building here, you're stacking, packing and stacking. Okay? And there's, right, a swing, day trade, day trade, day trade, day trade, day trade, out. So now you're a bull, where's your next entry? Not until they're stepping up again, right? Or you get back down to support. Ooh. You see, there's nothing. Okay? And if you reverse this whole process, you'll see the bears were going through the same struggles. It's not that they were any better. This is a swing short for sure. Followed by what? Right here is a day trade. Right here is a day trade. Right here's a day trade. Now, you're saying, Wayne, all the pivots are pointing up. I know, just reverse it. You don't need me to change it. Do I? Well, then let's do it. See, I can do it with my mind, but let's get it done for you. Indicators, bias pivots, bearish mode. Okay, done. Okay, now let's do it. Okay, bearish swing, bearish swing, bearish swing, maybe a front run out of position. Bearish, bearish swing, day trade, day trade, day trade. Okay. This one's complicated. Depends if you got it here or if you did it here. And then this is the full stop. Okay. So you wouldn't have sold this because it's a higher high. Okay. Same thing. No sell, 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 sell. All right? There's 1, 2, 3, 4, 5 days in a row of no trading. That's a whole week without trading. Why were you not trading? Because bulls were killing it. Okay? It was their turn. Okay? Here's a step down, so you have permission to sell here. Sideways, it's not ideal. It's not great, so you're kind of wary. But, right, this is what's in play now. Oops. This way. Because remember, it all began where you were waiting for the step down. Well, this is a step up. This is a step up. Step sideways, which ain't a step down. Step up, step up, step up, but with a lower low. So now what are you looking for? Well, you know the lower low is going to create a step down, so you want to sell up in here. Okay, so even sideways is still more bearish than bullish. So you're still selling your step down, or you're staying in this trade, and then boom, gone. So now what do you want? Now you know somewhere in this zone is the next day sell zone. Okay, didn't even get it. Okay. Here's the next day's sell zone. Oops. Okay. There's the next day's sell zone. And now you should, what? Stop selling. See, there was a time in your life where you would have just kept doing what you were doing because this was working so well. But yet, if you have a leading indicator, this is stop. Okay. Okay. Interesting, right? So one of the things that's going to make you a better trader is you don't look at everything as unique. There's too many variables for you to look at these charts as every day you walk in and you're willing to buy or sell. There's just too many variables for you to get that right. You need to look at these pairs walking in with a lens. You have to filter out half the opportunities. You understand that? You have to filter out half the opportunities. Because there's just too many. Do you buy? Do you sell? And if, whoa, there's just so much going on. So if you filter it out and you're saying, I want to buy this. So you're a buyer. You know that. For whatever nonsense reason. You don't even have to be right. It's irrelevant, your reason why. Okay? So you say you want to buy this. So you're filtering out all the sells. And you're only looking at buying opportunities. And it makes it easier. Do you buy at M3? I've never bought at M3 in my entire life. So there's no confusion there. You see that? There's absolutely no confusion. If I'm using price action, I'm looking at this area. If I'm using price action, I'm looking at this area. If I'm looking at pivot points, I'm looking at this area here. So I have multiple reasons as a bull that I would be interested in buying down here. Easy. I filter out all the other crap. So I'm not standing here like, what's up, fellas? Are we buying today? No. Like, no. I know bears are going to sell for sure. For sure, eh? So that's how I go through all that. So once we get into this zone and I walk in, notice my pivots are set only as a buyer. So I'm like, somewhere in here it gets interesting. There's some challenge. I'm not saying it's easy. There's some challenge in here. But of course, you're trying to turn something bearish to bullish. And eventually you get your double bottom, right, for the reasons that you wanted, in the zone that you wanted. So now you say, I guess the time is right. And then from there, you're buying the dips. Okay? And too bad, so sad, it only worked for a week and a half. Sorry. That's the side that didn't even make most of the money. The other thing I want you to realize is bulls and bears take turns. I don't think it's actually a battle. I don't actually think it's truly a zero-sum game. I think maybe for the amateurs that throw down dumb trades and get washed out, fine, great. They transfer their wealth to somebody else. But I think the professional traders look at it differently than an amateur. And I believe that everyone gets a turn. Bears get their turns to make money. Bulls get their turns to make money. And at the end of the day, like when you're in a room of 100 professional traders, 100 of them are profitable, but they all do different things. And they have different technical strategies, but fundamental biases. It's very unlikely to get 100 professional traders together and they all agree and they're all doing the same thing. It's not likely. So they're all doing something different, and many of them disagree with each other, but everybody makes money. Otherwise, you're not a professional trader. So they take turns. That's how I look at it. And so mentally, maybe if you look at it similar, your mind will be more agreeable to this versus, oh, it's all manipulated and it's all central banks and it's all this and it's all brokers and it's all somebody else's problem, right? Instead, you could say, well, this is where bears sell and this is where bulls buy, and this is a counter trend because bears would exit. Cool. Everyone gets a turn. Okay? Week and a half down, week and a half up, week and a half down, week and a half up, week and a half down. Everyone gets a turn, guys. You don't have to be greedy. Bears are going to exit. That's going to push the market up. And then it's going to get overbought and bears are going to sell it again. And then it's going to come down. We don't know if that's going to happen, but that's what we're looking at. That's what that suggests. Now, of course, we could reverse this, and we won't know until it reverses. And there's ways to set up that reversal, and that would be your opinion. And where would you get that opinion? Well, you're so certain Aussie is going to go up and US dollar is going to weaken that you're going to set up the reversal pattern early. Well, that's your brilliance. That's called your alpha. That doesn't exist on this chart right now. What exists on this chart right now is this is a roll reversal and this is an exit. And so what the chart is telling you is whoever sold here and here is going to sell here. Not this week, next week, or the week after next week. Yeah, we're talking a week or more in advance. You're welcome. Right? Isn't that interesting? You got to cut out the fat so you stay focused on what you want to do. And then once you know what you want to do, then you can analyze what the other traders are going to do. So if you're bullish here, you can analyze and say, oh, well, there's going to be a challenge here. I will, right? Your bullish trades will be threatened here. Factual. Okay? So now you can make logical, intelligent decisions on how you want to behave. If you were given a double bottom at 70, would you buy it? So you can get a double bottom that way. You can get a double bottom this way. Would you buy it? So now think of it from a bearish point of view. Bears, if you sell it at 71.5 or 72, you will be threatened at 70. Bulls will challenge you. They're like, no. Wait. We gave you the whole month of September, bro. Now it's our turn. We're taking this north in October and probably November and December as well. So congratulations on your wonderful September. Now get the hell out of the way. And this is how I want you to think about the market. It's not magical. It's just humans in a room, buying and selling. Take two. I'm buying two. I'll take two. Okay, you're a buyer. No, sell three. Whoa, no, the market comes down. Okay. I got 5 on it. Cool, right? Cool beans. I think I better do XRP before I forget. Oops, wrong one. Let's turn silver into XRP. Okay. All right. Oh! Now somebody, and I don't know if it was Peter, but somebody told me like a while ago that I was supposed to buy it. And I'm like, really? I'm glad I didn't. Anyways, maybe it was down here. I don't think so, though. So right on. So this bounces between, I guess it's got a lot of volatility. It doesn't seem to be trending up, however. I mean, you might argue from here, right? So why did it drop from 94 to 10? And why should I buy it now? I'm not familiar with XRP. I know it's called something else, and I know there's some reason why it's supposed to be different. But why would I buy anything that used to be 94 now and then recently was 10? Why should I care about this? Okay. In the live group last night, one of the things we talked about was cheap. I said I'd never buy anything because it's cheap. I hate cheap things. I despise cheap things. I like valuable things. And valuable means you paid less than its intrinsic value. Pete says because it's the future. Okay, fine. So it's kind of like Bitcoin. If I had bought Bitcoin at $2, I'd be rich by now. Well, I'll leave it at that. It's just food for thought. I don't like buying cheap things. I like buying valuable things. Just investigate. Okay, fine. Okay, I'm just. Think of it like if you were convincing me as an investor in your fund, you'd have to be convincing. So, right. So, anyways, you'd have to put that together. Just food for thought. All right, so now if I had the bias, let's say you were my boss and you're like, Wayne, you're going to trade this. Cool. And you're like, I want to trade it up. Oh. Because right now it's trending down. It's down 90%. Why wouldn't it go to 0? Okay, but anyways, you tell me you have to buy it. Fine. So therefore, is this support? Yeah. So now I got support in support. So I would be buying dips now. is what I would do if I were me. Okay. And if you don't like this, let's get rid of that. You can, because it's not dynamic. Let me put a dynamic measurement here. Okay. So as long as that's got a positive slope, I'm a buyer of dips. So I'm going to buy basic price action tells me this number here, 23.23. It's actually 23.29. Okay. So based on my technical analysis of this market, I would like to see something like this in the near future. Oops. It's funny. I actually almost worked. I want to see this in the near future. And it doesn't have to be perfectly that. Okay. I have a zone. So a way to do that is this. Okay. Another way of drawing it is insert, indicators, custom, biased pivots, but put it on a swing trade. So Monday swing trade is what? Is it down here? Wait, that's not drawing right, is it? This, what? That. Okay, there, weekly. I don't think the indicators are playing well together. Let's see, let me double check this. Biased pivots. Are these days? 24. Oh, these are day trades. Oh, okay. So the weekly is down here. Yeah, I guess that works. Here's the weekly, right? I can see it now. Weekly inside of the daily. So if you reverse this just to confirm it on the smaller time frame, the day trades, that'll produce this. Okay, you see that? Okay, you see that? So I'd be in day trading mode. Okay. So here's yesterday's trade on this, or 2 days ago, this was the buy, but it was too early. Okay. So I'm going to say that isn't correct, even though it went up. But the next day, you can see it was a buy zone because we have a step up. Okay. And then here's tomorrow. Or Monday. So the plan on XRP is between Sunday and Monday morning. I would probably look at it this way. Okay. We got to get to this level first. Probably get a challenge there. And then at some point, breach it to get to this level. But what will happen is we'll change the slope from negative to positive. And if so, we'll get another dip and likely break this target. But I don't know the fundamentals behind this. So when someone says you have to buy it because it's the future, it's not the same as you have to sell it because the central bank is weakening the currency on purpose and they're actually implementing policy and spending billions of dollars a month to do it. $100 billion a month to do it. Like, oh, they're going to spend $100 billion to weaken a currency? Yeah, I guess I'll sell the currency too. There's a big difference, right? But whatever. You could buy it tomorrow. It's 24/7. I guess so. I still don't think that way, but yeah, I know what you're saying, and I guess that's true. But again, because I don't trade crypto that much, and in particular because I don't know anything about XRP, I don't know what happens on Saturdays. You understand? I don't know what happens on Saturdays. Is it 100% normal market participants? Like, is a Wednesday the same as a Saturday? If the answer is no, then this would be invalid for a Saturday. Remember, if there's no market participants, your technical analysis is going to be less reliable because technical analysis is a self-fulfilling prophecy. So if 90% of crypto traders don't trade the weekend, I don't want to trade the weekend as well. Right on, Pete. So if the IMF, ECB, and 300 banks are involved in XRP, why has it dropped 90%? If it's so good, I still want to know, why did it drop 90% if it's so good? Okay. So I get it. You know, it's like saying, well, I invested in Madoff because he's well known. He was the chairman of the NASDAQ. All my my royal friends and my rich Jewish friends and everybody loves him. He's still an a-hole. He's still a liar and a thief, right? So, hey, ECB's in on it. IMF's in on it. 300 banks are in on it. Yeah, well, it dropped 90%. Like, so what? Right? Yeah. So, we'll wait. That's all. I don't like buying anything that's dropped 90%. I like buying stuff that goes up 90%, right? So maybe this is the turning point of the entire bottom. Maybe it's nothing but up from here. Okay, maybe. But I could always buy it next year and still make money, right? Because it's dropped 90%. Actually, look at that. It didn't drop 90%. It dropped 95%. Like, so, again, it's cheap. Great. So what? Okay? When you buy cheap stuff from a store, what happens? It breaks. You paid hardly anything for it, and it was worthless. You paid too much. So that's all. Just my point of view, and of course I could be wrong. I don't like buying cheap stuff. I like buying expensive stuff. But I don't like paying expensive prices. I like to get a deal. Okay? So the logic there is I want to buy something less than its intrinsic value. Okay? If you can buy a 2-year-old Lamborghini and save yourself $100,000, but it looks brand new and it's got 2,000 miles on it, but you're paying $100,000 less because of depreciation, you're like, that's a deal. But even in that situation, intrinsically, it's only worth what you paid for it because it depreciated, and that's still the full market value. So on top of that, right, you got to buy it from a widow or something. She's like, every time I look at that good, Lamborghini, just get rid of it. You can have it. You can have it for half price. Just get it out of my driveway. You're like, okay. So that's what you need. I mean, you have to buy it for a deal or a steal. Okay. So anyways, just my thought. I'm not saying XRP is worthless. I'm just saying it's 99% less than it used to be. Yeah, right on, Pete. So I'm not knocking you down. I'm just saying, that concerns me, right? That's all. Yeah, where you been, Reb? All right, XRP daily. So, I guess we'll keep an eye on it. So that's what I would do if I were me. I suppose buy dips. Nice. Making a living, huh? Sometimes you want to go where everybody knows your name. All right, so what am I going to do here? Still a little early on the Peso. And we got about a week to go, right? So next week, I'd probably want to get short some peso. Well, long some peso, short some USD peso. What do you think about that? Smell like a plan? Nothing here says it's ready. Oh, I know. Okay. So what I'm looking for is probably something like this. Okay. I'm going to need the dollar to weaken, though. Oh, right on. You're buying a house, Reb? Or you got more than one? You getting multiple doors, or what are you doing? Condo, maybe, huh? Multifamily, 4 doors. All right, that's not bad. That's good. I mean, what you're doing is you divide your risk by 4, which is great. Because you have one roof, not 4 roofs. You have one lawn, not 4 lawns. Now you have 4 toilets, right? But, okay. Well, good for you. Congratulations. Yeah. So that's your that's your retirement income. That's really cool. Are you getting a good mortgage rate? I mean, that's the ultimate thing. I mean, the cost of financing is so wonderful now, but only relative to the past, I suppose. Like, when are interest rates going to be super expensive? I mean, it could be a while. But I know people are being asked for liquidity provisions now, which is pretty interesting. Well, that'll tell you, Jeff, that this has a lot to do with the U.S. dollar. Once again, I think a lot of this has to do with the Fed saying that there's not anything else they can do. I think Powell has basically said they're done, and that it's up to the government to do fiscal policy from here. And the government says, no way, Jose, we can't do that. And so people were betting, if you will, or had made decisions based on the assumption of at least $1 trillion being deployed into the U.S. economy by the federal government. And that ain't going to happen anymore. So people had to pull that. So what that means is if the money supply, let's say, it's not quite true, but let's pretend it's money supply. If the federal government added $1 trillion to the U.S. economy, that would lower the value of the U.S. dollar. Done. So people sold the U.S. dollar in anticipation of that happening. And then once they find out, wait, they're not going to put in $1 trillion or more? Oh my God, right? And they remove those trades, which means those trades get offset. And the way, of course, your broker offsets the trade is to buy the U.S. dollar, and the dollar gets strong. That's the way of thinking about it. It's not actually, the mechanism behind it isn't exactly that way, but you get the same result. Okay. Well, the difference between monetary policy and fiscal policy is the monetary policy, the central bank creates the money. In fiscal policy, it's a little more complicated. They either have the money that they've already budgeted, maybe they borrow the money by issuing bonds, maybe they print the money, so they debase their debt. There's multiple ways for the government to do it, and there are different results. Also, the methodology that the government does it. So, if the government gives everybody in America $1,000, and I think they did that last year, didn't they? One day we had like a bunch of money in our account from the government. We're like, really? We didn't need the money, and then we just got it. We're like, oh, what do most people do with that money? Well, they go out and buy diapers and cigarettes and alcohol, right? That's what most people do with the free money. So what happens is, well, Jim, we have multiple kids and stuff, so I think it was more than that. I think it was 1,200 plus, like, I don't know, another 600 per kid or something. It was more than that. But anyways, I think it was even more than double that. I don't plus five. Okay. And then, but is it per person? I thought it was more like $3,000, $3,500 or something. But whatever, we got a bunch of money. Most people go out and spend it. Now, people with wealth would. Oh, actually, we spent it. We went on vacation. Thank you. Boom. That's right. We went to Florida. Boom. So we spent it. And we put it in the economy, and that's typically what happens. Plus the kids, right? Yeah. So that's right. So we got 2,400 plus another 1,200 for free. But we did what a good Americans and registered aliens would do. Because the government put it in our bank account, we just went out and spent it. But that's what the government wants you to do. So I helped out the economy because I'm a good person and I'm a good alien. And I took all my free money from the government and I spent it on a condo and beach in Florida. The downside is I gave Florida COVID. Sorry, Florida. Like, here's some money and some COVID. And then, so Florida went back into another lockdown after we left. So anyways, if the government simply gives it to you, you're likely to spend it, and very quickly too. Most people, they just spend the cash in their hand, right? Wealthy people tend to just put it in the bank account or whatever and not spend it. So most people spend it because most people are not rich. So the next thing they can do is like give you a tax rebate. That's not as instantaneous, right? Is that cash in your hand? Now, the tax rebate's cool because if you don't pay taxes, F you. I'm kind of a fan of that, but it doesn't help the economy. But like, hey, man, you don't pay taxes, you're not part of society, so F you. You get nothing. But that's not going to have the same economic impact, all right? A tax rebate, a tax deferral, that kind of stuff, a tax break does not have the same impact. But to the government, they're giving up something. If they're like, okay, you pay $5,000 less in taxes next year, okay, that's helpful on the long run, but it's not going to make me run out today and buy alcohol and cigarettes and diapers. And then there are other ways of doing it as well. You know, let's say they decide to build a road and then they hire a company with a bunch of equipment and a bunch of employees and they go out and they build roads and you give them money. And remember, when the government buys a new road and a corporate, like the government doesn't build the road, they get the money, they budget the money under G, if you remember GDP, right? They budget the money, they spend it on a company that builds the road, but that's somebody's income. And now they have income and they go to Applebee's. And now the waitress has a job, right? Gets paid. And now that money is her income. And she goes and buys cigarettes, diapers, and alcohol. And it trickles down and through the economy. But there's a different velocity to the deployment of this new capital, isn't there? Okay. So interesting, right? So is it the same as the Fed? Well, the Fed, when they do monetary policy, they, instead of the government hiring a company to build a road, which puts money into the real economy. The Fed has to do something similar. They have to go to a bond dealer and buy bonds from them, giving them money, which then trickles through and enters the real economy that way, which is not instantaneous. And you don't see $1,000 hit your bank account. You're like, oh my God, the Fed just lowered interest rates. I got $1,000 in my account. So there's different reactions and responses. Now, here's another way of thinking about it. If the government borrows money to put the money into the economy, they issue bonds. What's the problem with that? Well, if everyone's buying government bonds, because now they're front-running government, right? There's less people buying corporate bonds. So now we call this crowding out in economics. So now you imagine you're a medium to large size business, but maybe one that's no one has ever heard of. So I'm not talking about Apple and Google or something. But let's say you're a company here in the United States. You got like 8,000 employees, and you make widgets and gadgets, and you're a legit business. You've been around for 25 years, and you're big enough to issue a corporate bond. And this is part of financing your cash flows or financing investment into a bigger factory so you can hire more employees or whatever, right? So you got this legitimate need. And so you issue a bond and you put your bond out into the market and you're like, hey, investors, lend us $1 billion and we'll pay you, 4%, which is a lot better than what you'd get in other investments, right? And that's what these companies do. They enter the capital markets to fund their projects. And they can fund it through their current cash flows, but the expected future cash flows as well, right? So they issue a bond. But now, if the government, which is now risk-free, because there's going to be risk associated with loaning a small business or a medium-sized business money, because what if the economy turns and no one buys their widgets and gadgets, and now they got to lay people off, and they don't have the cash flow to fund their debt? It's risk. That's why you have to pay 4% as a company. So anyways, the government comes out, they're risk-free, and they're like, hey, man, we're issuing a bunch of bonds because we're going to stimulate the economy. And the government and people buy from the government, there's risk-free. Now, of course, the government's not going to pay 4%, but that they're going to front-run it and make money on the appreciation. So anyways, so you do that trade, but now no one is lending money to the medium-sized business that needs to borrow money to actually build a factory or something, right? Buy equipment or something. And now you're hurting things because you're crowding them out. If all the money is going to go to the government issuance, then to the corporate issuance, there's less demand. Which means now either no one buys your bond, or to attract people to your bond, instead of paying 4%, you're going to have to pay 5%. And woo people away from the government issuance. Okay, so it's not necessarily a good thing to do it that way. Wow. What questions you guys got? Yeah, interesting. Yeah. Thanks for the great questions, guys. So anyways, maybe next week I'm going to sell USD Peso. I need that risk on mode, though. Need the risk on mode. I need to see it across the board. Quick look at what? Look at that. So Dixie's just crushing it. So these are all 1 hour, right? Why don't we look at it from a bigger point of view to get rid of the volatility? Right? The bigger the time frame, the less the volatility. So you take a look at this, and what do you stink? Dollar's just ripper strong. Don't want to get in front of that freight train. Aussie's weak. So one of the things we discussed last night in my trading group, my Thursday swing trading group, that if you read the RBA meeting minutes, which I know you did, Tuesday night, I know you downloaded it and read it. They told you why. So if you didn't read the RBA meeting minutes, you don't know. And of course, if you didn't do it, nobody cares. You don't know because you don't do the work. So what? Not our problem. So if you want to figure out why the hell that happened, why don't you read the meeting minutes? Reserve Bank of Australia, Google it. Find out the meeting minutes. I believe it was released in Australia Wednesday, which was Tuesday night here. Or join the live trading group. Maybe we'll just save you a bunch of time because we talked about it last night very specifically. And of course, we put that into a chart too for trade setups. But if you didn't understand why this came out of nowhere, you need to do better research. Okay? The RBA told you exactly what they actually created that. So, and the answer is in the RBA meeting minutes. Did I make that clear enough? Is anyone here going to make a personal commitment to actually go find those RBA meeting minutes and look for information on what would have caused that? Yes, all the meetings are recorded, yes. So wink, wink, nudge, nudge. Is anyone else going to make a personal commitment to actually go find those meeting minutes, read them, and try to figure out the puzzle? What the hell is in that report to create billions, 100 billion down? Emmanuel did read them. So Emmanuel, right? And do you don't tell the answer, Emmanuel, but do you believe you know what I'm talking about? Meta, is that right? When? 2.4 trillion? No, that's too much. Did that just come out now? So, okay, Emmanuel does know, right? Wink, wink, wink. Okay, good. Oh, wait, in the news? Oh, Meta. Well, okay, fine. So, is it being written and it's in the House? And it's or what? House Dems. Yeah, it must be true, right? Found it in today's. Yeah. The Dems. Okay, so they want to spend more. So they're pissing off the Republicans, right? Because the Republicans, they don't want to spend that kind of money. So that's interesting. If it's game on, guys, if that is true, and we need to confirm it. Like I trust Meta, but like there's a lot of news, right? Yeah, well, no one ever intended 3. So, like, you can learn a lot from India. Like, I think India is the wave of the future, right? The whole world 100 years from now is going to be just like India today, right? It's going to be madness and chaos and a population through the roof and social stress like you wouldn't believe. But it works, okay? In India, what they'll say is, hey, everybody, we, the government in India, we're going to jack up taxes by 10%. And people are like, 10%? And there's riots in the street and protests and boo, boo, down with the government. And they're like, oh, okay, we'll raise it by 3% then. And they're like, oh, that's so much better. And you're like, nice move, man. Smooth move. Because you know they're going to jack it up 3. Shoot, they would have been happy with 2. So, right? So your first move is like 10. But that's out of game theory, right? So anyway, it's like they're coming out like, yeah, we want 3 trillion and we want to give all the money to poor people. And the Republicans are like, what? There's no way 3 trillion and give it to poor people? No way. You want to give it to rich people. So now you have to so one of them is thinking 800 billion and the Dems come out, 3 trillion. wow, right? And you work your way, and you watch, it'll come down to 1.6. 1.6T. Right? But I'm surprised that it's back on. So, guys, if we can get close to maybe a deal on the table, the US dollar will weaken because it's a good thing. And once again, you're going to have to thank the Fed for this. And I know lots of people hate the Fed, but if Jay Powell didn't come out and say it over and over and over again, there's nothing we can do more. We've done everything, and we're the only ones supporting this whole economy, global economy. And if you don't come through, we're at risk of a major collapse. So they're forcing the government to do something. Now, typically they stay neutral going into an election. So it's actually a pretty big thing to say, look, we're not going to raise interest rates for 3 years, but we're not, but that's that. Like, he doesn't say anything else, which means he doesn't want to do anything else. So he's like, dude, I'm done. So, hey, government, do what you said you were going to do, or do what you're supposed to do. See, a government, if you follow Keynes, so put this down in your education to-do list, right? The difference between von Hayek and Keynes. Now, Keynesian point of view is that the government during good times should tax you. Now, the Americans, during good times, they lower taxes. So you're like, that doesn't make any sense. And then during bad times, you lower taxes. But in bad times, Americans lower taxes. Right, but the government's supposed to step in and spend during bad times. Okay, so what you're supposed to do when the economy is doing good, tax people, take all the money and save it, and have a surplus. When was the last time we had a surplus? I think Clinton claimed to have a surplus. I don't think it was really a surplus, but the late 90s were pretty good when money was free. But during good times, according to Keynes, the Keynesian theory of economics, is that during good times you would raise taxes and the government would save all the money. And inevitably there's going to be a bust and the whole economy goes into the toilet. But now all that money you save for a rainy day, now you put that back into the economy and you create jobs. You create demand. Okay, the government creates demand for employees. The government creates demand for energy. The government creates demand for economic activity until the economy doesn't need it anymore, right? Well, that's long gone, and the Fed has been relied on since Paul Volcker. The Fed has basically run the government. Not run the government, floated the economy, and the government hasn't done anything. Right? Hasn't done anything. Fiscally, I would say. Right? So the reason why everybody or all the Republicans love Ronald Reagan is because those were the good times. But of course, that was not Ronald Reagan. That was Paul Volcker. So from then, the Fed has had control. And right now, there's like the Fed is like, dude, we're creating the bubbles, we're bursting the bubbles, we're saving the economy. Like at some point, government, you need to step in and do like something governmental, right? So I don't know. So we'll see. Typically right now, like this late into the political cycle, the Fed would not say anything like this. They would just be absolutely neutral. It's sort of like the lockup period during an IPO. Like, as an employee, you can't say nothing, right? So anyways, it'd be interesting if they do something, and if they do something, and I love it when I say do, if they do something, then that will weaken the U.S. dollar. Okay? See? So pay attention to that. Most likely it's fake news. Okay? Okay? Not that the news is being misreported, just like most likely it ain't going to happen. No, made us watch is, the real stuff. But the thing is, I don't know if it can be done. It may just be too late. Yeah. But, maybe the opposite's true. They're like, if the Democrats come in and claim victory to have saved the average Joe on the street, then maybe they get elected. Okay? There's a lot more poor people than rich people, right? So if the Democrats come out and say, look, we got this, $2 trillion and we did it because we care about the average person. It's very electable when you give the average person free money and you're like, hey, it was because of us. Maybe you should vote for us. And I'm not picking on the Democrats in that situation. Hey, if the Republicans could do it, they would do that too, right? But it's an old story of, like, again, going back to the Romans. Hey, free bread, just don't riot. All right, it works really well. Here's some free money, don't riot. So whatever, we can get off politics. So just pay attention. If the government does initiate a new fiscal policy, the U.S. dollar will weaken. You got that? What do you stink? Smell like a plan? Thank you for being a subscriber of Forex.Today. Thank you for being a client of TradersWay.com. If you need training at FX Bootcamp, the link is in the description below. If you need a book about Forex trading, the link to my book is in the description below. If you want my chart templates, the link is in the description below. Oh my God, there's so much stuff. If you need help, if you got a problem, I'll solve it. Check out the hook while my DJ revolves it. Thank you for being a part of this community, and the hard work you put into it, and the professionalism and your loyalty and all that kind of stuff. You're good people, and I like you. So have a wonderful weekend. Maybe I'll see you on Sunday for Off the Charts with Wayne McDonald. It all depends on the weather, guys. The boss won't let me smoke cigars in the house. So if we got good weather, check out the email. Okay. And if you're like, how do I get those emails and stuff? Go to fxbootcamp.com, sign up to be a member. Join FX Bootcamp or the Swing Trading Group. Or stay on the outside. Peace on earth. May the pips be with you. May your profits be above average.